there is a portal that they're communicating and providing information through. And so SBOG was the first portal that was created, by the way. It didn't go really well initially, but since they rolled that out, the other portals for like the RRF and now for the EIDL, because there's a whole new portal for that, right? Communication is being encouraged through the portal. So there is, and I have not seen it, but I would encourage them to bring up their portal, right? And there should be a direct, secure communication through the portal to the LOs or loan officers or that support team directly. And so if there's questions about the application, the portal is the right place to go where it can be documented and attached to the application. Now they'll typically give you a toll-free number for disaster assistance, and you can even call just the regular disaster assistance number. And in fact, I'll give it in just a second on the slides, and just ask for support. But the problem with that is this type of response is directly connected to the SVOG, and there's only a small team of individuals that have that type of, access to the files to be able to review and communicate, right? It's just a small group of individuals, as well as being able to see or make anything happen. So she needs to, or he needs to, directly communicate through the portal to those individuals that have access and can answer questions on it. Now, we'll go through this in a moment because it's the same with all SBA disaster products. They have a set eligibility requirement. So you have to, like when you're evaluating if something was kicked back, you have to go back through what was uploaded and submitted in the file, and that would be where I would start. And then just make sure that the level of detail to clearly identify eligibility has been provided. And when you do anything with SBA and you are providing any type of documentation, there needs to be some level of certainty or acknowledgement that the information being provided in connection to the application is true and accurate based on the owner's say. And so they need to sign and date or make sure that that information has been verified through the IRS. And we'll go through that again, and then we can circle back around and see whether or not I answer the questions or you've got a good basis to start approaching that process. But it's all very similar.
Okay.
Okay.
Thank you.
Okay, let's go ahead and get started. I want to be considerate of everyone's time. Welcome this afternoon. My name is Paula McCain. I'm a recovery business advisor with the North Central Texas Small Business Development Center. Today is National Spoil Your Dog Day and National Lazy Day. So pick one, pick both, don't pick anything. It doesn't matter. The SBDC is the leading provider of assistance for small businesses, and because we are grant funded, we can bring resources and programs to you like today's webinar. Today's webinar, by the way, is SBA loan updates and specifically EIDL, but we may get into other areas as well. If you would, please put all your questions in the chat room and we will address those during or after the webinar or after the presentation. I want to introduce Rebecca Schultz. She's been helping business owners to access money and financial education for a long time. She is founder and executive loan consultant of Centerlock Funding. Thank you, Rebecca. It's always wonderful to have you.
Thank you. I always enjoy coming and sharing with you guys. And this topic is one that we actually have even an update that's taken place within the last hour. So, again, it is once hot. So let's go ahead and get going and kind of catch you guys up on what's happening on the SBA economic aid front, specifically talking about the EIDL loans, right? The economic injury disaster loans. My name is Rebecca Rebecca Schultz. I come to you with over 25 years worth of lending experience, primarily supporting business owners as they access capital. I've been doing SBA loans and working with SBA for over 15 years. So I like to consider myself somewhat of an expert, and in kind of coaching and walking people through some of the uncertainty. I'm certainly doing that live and have been since the pandemic has happened. So I always like to start off with just a quick little, fun meme or quote. And this one really spoke to me with the topic, which is how you respond to the challenge in the second half will determine what you become after the game, whether you're considered a winner or a loser. And we are in the second half, I feel, of this whole COVID pandemic. And there's a lot of movement happening, still a lot of uncertainty as business owners are trying to figure out what to do next or how to survive the challenge, right? And so hopefully this information within the webinar, as well as your constant communication with your SBDC advisors, will support you in becoming a winner. Right, so moving on, let's talk about what will be discussed. I know I kept on adding on to the agenda, and I'm so sorry, but I needed to go ahead and break out each one of these because when we talk about economic entry disaster loan, because we've been going for almost the full 2 years, right? That's kind of scary. We're getting to that 2-year mark in the next few months. We need to make sure we're covering everybody's bases. There are different stages or levels of the conversation, and I don't want to leave anybody out. And plus, you might be at one stage, right? And there's a second or third stage going on there after that. So I want to make sure that you're prepared with information to accurately navigate the field. Okay, so here we go. We're going to talk about just the updates, right? Remember I had told you within the hour there has been a major update that we'll talk about. Then we're going to go into eligibility requirements. You might have come in a little early and heard me talking to Roger about eligibility requirements, and I made this little blanket statement saying all SBA loans, no matter what we're talking about, they all have similar eligibility requirements. Well, the disaster loans that we're talking about, whether it be the EIDL loans, whether it be PPP is a little different, but let's say the targeted EIDL advance, which we'll get into, the SVOG, the shuttered venue, or maybe the restaurant revitalization or the RRF, right? There's so many out there and they all share very similar threads to eligibility requirements. And that is a big factor. So we'll go slowly through that. I'll break it down to give you some guidance. If you're having problems with getting a loan approved, like you've already received a decline notice, remember I'll cover that too. We really want to pay attention to the eligibility requirements because typically the decline's coming from that. So that's why I want you guys to pay attention to all levels of the conversation because we build upon it. All right, then we're going to talk about interest rates and terms. I have a big concern right now, and it stemmed from going through over 70 business applicants to a program I participate in. And out of 70 business owners that I talked to in a matter of 4 days, like that's a lot of talking, all right? I am really concerned about people's understanding around the interest rates and terms and really going into liens and other aspects that they should be considering when taking this funding. So I'm going to kind of give you a whole nother twist. It's not something that SBA is going to give you, but we're going to talk about it from a commercial lending, growth capital, what you got to be concerned about conversation. Okay, I'm going to be your kind of coaching guide on that capital conversation. Right, and then we're going to talk about this whole new increase in SBA EIDL loan funding, right? They just came out the gate at the end of last month. Really, it was noted in April when we saw an update in a bill, but really last month was when it was being pushed heavily and people were kind of waking up to the fact that more money was being made available through the program. All right, so we'll talk a little bit about that, how you would calculate how much would be eligible, what that process looks like to go for reconsideration. All right, and then we're going to slow down and really have a good conversation about how much money you should be taking. All right, again, I'm concerned that people are trying to grab too much money, and that's going to impact them negatively going into the future. All right, and just as the government has passed money available for businesses for disaster-related needs, they have also passed huge amounts of money, millions and billions of dollars, for what we would consider an audit process and fraud mitigation process. I want to warn people of this, right, because I feel like I'm seeing lines blurred that are going to lead to a lot of penalties and problems or headaches for businesses in the future. So we're going to go slowly through with that audit and documentation requirements, the commitment that you're making when taking these disaster funds. All right, I'm going to prepare you for success there. All right, and then what happens when your loan has been declined and you're sitting in limbo, not knowing where to go? Right? Remember, the same conversation can be really applied to the SVOG or to the RRF, slightly different funds, right? Slightly different offers or terms, but ultimately we're dealing directly with the SBA, so we have the same type of protocol we'll be talking about, but we'll walk through what that decline situation looks like and what you can do to support yourself there. And then I'm going to switch gears and I'm going to go into the Targeted EIDL Advanced Grant conversation, and then there's a Targeted EIDL Advanced Supplement. I know, I feel like they're just adding little adds or verbs to names. It's getting a little crazy here, okay? But we'll talk about what's going on that front since it is still related to the disaster conversation. And I'm going to end on how you use these funds, okay? Because I feel like once you get the money, the question is, right, how you document your use of funds, what are your obligations, and what are those big no-nos, right, that you don't want to fall into any traps over, right? So we'll end the conversation on that. That is a lot, right? I got to get through it in an hour. So let's go ahead and get started. All right, so the newest updates, what's happening on this front? And breaking news, you guys have probably heard that the Biden administration, actually a bipartisan party, has been working on an infrastructure bill. This is big, right? Like we're talking trillions of dollars. It's set up to make a big impact for our nation over the next 10 years. That's how big we're talking. All areas of our economy would be impacted, all right, by this type of spending bill. And just to note, this was actually noted earlier in the week, right? But according to the bill, right, this comes straight out of CNN's news just less than an hour ago. Within that 57-page summary that was released, lawmakers are leaning heavily on repurposing unused COVID relief funding to pay for the new legislation. Right, it lists savings on unobligated or appropriated funds for this EIDL loan, as well as other areas like the unused funds for the PPP program. There's roughly what, $3 billion that were unused in that, as well as the Education Stabilization Fund and then the Airliner Workers Fund. So whatever has not been spent, if this bill is passed, huge chunks of this money are going to be repurposed and put towards the infrastructure bill. What this means is businesses that have not yet been successful and being able to get approved for any EIDL funding may lose the opportunity ahead of the deadline, which is December 31st of 2021. Right, a lot of people were operating under this kind of assumption that they had until the end of the year to be able to fix any errors or problems that were on their application, right? Because things have taken a long time to get fixed. Let's not joke with each other. It's taken months and months for businesses to try to wade through the red tape to try to figure out what to do. Well, that's going to change, right? That money may not be available. So it's going to help us really put our attention or focus on getting through this EIDL process as quickly as possible. Okay. All right, now with that bad news out of the way, I feel a lot better. Okay, so let's talk about what is happening on this front. All right, we know that those that have not yet been approved for an EIDL loan, right, you can make new applications, brand new applications, if you have not applied yet, and you have until the end of this year. Now that might change, right? Bills can change everything. I just told you that that could change. But right now, based on the law, we have until December 31st of 2021 to apply for an EIDL loan. Now, how do you do that? You go to their website. Everything with the disaster loans, right, outside of the PPP, everything else with the disaster loans goes directly through SBA. So it would be sba.gov/EIDL. They have just increased the maximum loan amount under the EIDL program to $500,000. Now, I'm just going to give you a little history on this. Right? $500,000 for an EIDL or economic injury disaster loan is the normal amount. We saw just after the pandemic broke in roughly April of 2020 where that $500,000 amount was readjusted downwards to $150,000 amount per each eligible business applying. All right. And that was a shock to a lot of business owners because even at the 500,000 amount, it wasn't enough. Right now, I guess they have redecided that enough funding was available to go back to the normal 500,000 amount. All right, and we'll talk about that, right? What that looks like, how do you calculate it? We'll talk about that in a minute. But I want people to understand they need to know how their loan amount is calculated because they have the direct impact and they're providing the support in order to request the most amount of money available. All right, so we're gonna walk through that. It's a little tricky there. Then we want to make sure that loan eligibility requirements are clarified because I mentioned you need to make sure that you clearly meet the eligibility requirements, and that gets a little tricky at times, so we'll go through that. I'm seeing a lot of people fail on that front. And then they have a new portal that they're directing you through for all reconsiderations, the application, communication, uploading and submitting documentation. All of that is going through this new online portal, which is managing it all. All right. And so no longer are you going to have to, you can still call their toll-free number 7 days a week from 8 a.m. to 8 p.m. But no longer do you have to. You should be able to get communication and follow the progress of the application through the online portal. All right, so I mentioned the portal, right? That's part of SBA's improvements that they have made in order to speed things along, improve turnaround time, improve communication. All right, so they've invested in additional personnel. In fact, I was just on it this morning, and it sounds like they have hired call centers from around the world. I know. Where there we are. They have new personnel that are supposed to increase the processing time. Originally, they had told us that one loan officer would be able to approve one loan per day. That's a little scary, right? That's what we were dealing with before. Now, through this new online system and the new muscle or team that they have hired, they're able to process over 20,000 files per day. This is a huge increase, right? And so their goal is to go ahead and get rid of the backlog of communications by the end of August. Now, why is August an important time frame for them? All right, so anybody who knows that we're dealing with the government knows that we're on a different system or time frame. They're trying to get this all rectified and really taken care of ahead of the new fiscal year that they're going into, all right? That's important. It's also important for that bill conversation that we just talked about. Really, we need to take care of this before the new fiscal year is my interpretation of the communication here. Right, so switching to eligibility requirements. I told you this is where a lot of people will have errors or hiccups and they don't anticipate it. Right, but the eligibility for the economic injury disaster loan falls under just a few categories, but you have to document it. All right. One, you have to be a small business. So that's defined as having fewer than 500 employees, or if you have more than 500 employees in your industry, it allows you to have more, right? There's different thresholds of employee or labor counts. You would have to connect that for the SBA on the SBA size standards. All right, I have seen a few businesses where they weren't super small, but they still had to go to great lengths to document. There's actually a special form that you would fill out to self-certify that you are considered a small business. So if there's any concern that may be a hiccup, that you have to go and fill out that extra form. We'll talk about that form. We'll give you the form number in a minute. But you have to make sure that you fit the small business eligibility. Right, and included in that eligibility would be sole proprietors and independent contractors. All right, now how do you verify your sole proprietor or independent contractor? That typically comes from a Schedule C filing that you have, right, or from 1099 documents for your labor or wages from previous years. You have to document that for them. All right, you can also be a privately owned nonprofit organization, which includes religious nonprofits, which are eligible based on their size. All right, so you would have to document that as well. All right, now this is a newer one. We didn't really talk a whole lot about this in the last economic aid update that we talked about, but they're clearly defining a credit score that they want to see from those guarantors, and that would be a 570 or above. Now, whew, all right, when we get to this conversation, I want people to understand they do have a cutoff at that 570, but that doesn't mean that you're powerless if you're really close or you're just below. All right, SBA has always been open to understanding the situation. All right, so if you have a close credit score and you feel like that might be your barrier to getting approved, I would recommend that you pull your own credit score. You can do that for free once a year. Right? You pull your own credit score and you see where you are. And if there's adverse information, right, delinquencies or information that have come up that are keeping you from being at that 570 or above, you can document that and you can do a letter of credit explanation. And that's what we call it, a letter of credit explanation, where you go into detail. Now, it's always best if you have a copy of your credit report with you, right? You could show that. You go into detail what happened. If you can connect the adverse credit score with direct impact from COVID-19, and you can show that it's not going to be a detriment for repaying this SBA EIDL loan in the future, right? Those are the things that they're worried about. Then you want to write that down and come up with a statement. Make sure you sign and date that statement. That's an important factor. And then you upload that through the portal as part of your dispute process. All right, you need to go to that level. You can't fight something you can't understand. You can't explain something if you can't show that in writing to the government. So you need to go to that level of explanation. All right, next you have to show that you are a small business that has been in operations as of the date of disaster. Now this gets a little confusing because different disaster programs out there like the PPP, right, and the EIDL, they have different start dates because of the legislation that was enacted, right? And so this start date for the EIDL is actually January 31st of 2020. You had to be in business or show evidence that you had invested in your business to a point where you had losses, right, on or before January 31st of 2020. So if you're coming into this conversation and you started your business on February 1st of 2020, you are not eligible for the EIDL loan. You might have been eligible for the PPP loan because that start date for that particular program was February 15th of 2020, but you may not be eligible for the EIDL loan program. Okay, all right, so all owners with 20% or greater interest in the business have to be here legally. Okay, that is part of the conversation. Now, when we say that, you can show that the entity, the business that you're operating, is a US based entity, and you have an employer identification number that connects to the IRS records that have been filed. Okay, that's one. Or if you're an individual or independent contractor, that you are here legally and you've got your tax identification number, okay, or your social security number, or EIN or ITIN number, right? And if you're a non-citizen who is a resident of the United States, as long as you have your green card, right, or you're considered a permanent resident, or you have that ITIN number, you are still eligible Right? So it's a little difficult, but if you have any issues where maybe I've had this in the past, there's a majority owner with 20% or greater ownership, and they are not a US based citizen, right? And but everybody else is, and the business is in the United States. You need to think about that conversation and be able to help document it for the government. It does clearly state 20% or more ownership has to be within those categories. If you have a section of it outside of that, that needs to be rectified before you come back in for eligibility. Whew, I know, right? In heart, it's not that hard. But remember, we're having to document all of this and make sure that we're clearly stating that we meet the eligibility requirements. All right, let's switch to documentation. Again, this is one of the number one reasons why people are declined originally for the loan. They have to show they were in operations, and they have to show the amounts of loss, right? So remember, the whole EIDL premise, getting money for disaster, shows that you have been impacted by the disaster. You have to make sure that you show what was the normal state of the business before the disaster, and then the impact, right? And where you have a loss, right? The difference between your normal operations and where you are in 2020 because of the disaster, that loss there is what they're trying to support or fit. You have to show that. And so this gets a little hairy at times, but if you were in operations before January 1st of 2020, right, they're going to be looking heavily at your 2019 tax returns. That is going to be a requirement for you. If your start date or established date is before that January 1st of 2020 timeframe, all right? Now, they're saying that they want to see your 2020 tax returns if available. That whole if available conversation, right? I don't agree with it, right? Because I see too many things happen with business owners that haven't yet filed their 2020 taxes. You got to clearly define for the SBA where you are in that conversation. If you filed an extension, then there's an extension agreement that you want to connect to your application. All right, you would go out there and show that you have not yet filed your 2020 taxes. You have an extension. You're not delinquent, right? You're abiding by the rules there. In addition to that extension agreement, you need to be able to provide your end of year 2020 financials, and that would be an income statement, also known as a profit and loss statement, and a balance sheet. Now, he doesn't stop there, okay? They want to make sure that the shareholders that are providing that information know that they're providing the information to the best of their ability. They're not lying or trying to give mis or false information. So they're going to require that you sign it and date it. Now, you might be going through this whole process and you have submitted all this information and you forgot to sign or date those statements. They're going to kick it back as a reject or a decline, right? And you might be sitting there beside yourself trying to figure out why it was declined. Remember, there are the little nuances there that's got to be fulfilled in order for them to accept it. And unfortunately, they don't turn around and baby anybody, right? They're not going to tell you, oh, you forgot to sign and date it. Go ahead and sign and date it and get it back to me. They're just going to reject it and make you try to figure it out. Okay, so please sign and date any information. It confirms the information is true to the best of your knowledge. They're also going to want to go out and get copies from the IRS of your tax statements that have been filed to confirm that information against your tax returns you've provided them. That's where they make sure that you're giving them accurate information. Now, this has become the bone of contention for most business owners, right? Because the IRS is over 6 weeks past due on updating that information. So if you filed your 2020 taxes, it may not be available under the tax transcript, data source for them to verify. Therefore, it might be hanging everything up. All right, so if that's you and you understand that they have not been able to verify information, there's a couple things you can do. All right. One, you have the ability to go in and get your personal tax return verifications, right? The 4506T through the IRS website, irs.gov yourself. You can go in there, you can get that information online, right? And you can pull a copy of that verification tax transcript. And then with that, you can upload it to the portal and provide it to SBA. I have seen them successfully accept individual submissions of that information and avoid having to go through that whole lost loop. All right, so you can be watching it on your end and provide it to SBA to speed things along. The only problem with that is that you can't get your business tax transcripts that way. It's only consumer tax transcripts. The business tax transcripts you can write to and try to get back within 7 to 10 days, or you can make a face-to-face appointment with your local IRS office and walk up there and get one of their IRS agents to print out that tax verification for your businesses. If you have multiple businesses, all right, so you have multiple entities and those entities have applied for assistance under this program, right, you need to have all entities tax verification done because there is what they would consider a aggregate effect. They can't lend you more than $2 million total for all affiliate businesses or entities that have similar ownership. So you have to go back and provide all the tax documentation for everybody or all your businesses in that sense. I know, right? Like that was bigger than what you thought. And that's why I told you I had to like break that down, because many of you are sitting there struggling and you don't really know the full conversation. All right, so let's take this on. That was for businesses that were in operation before January 1st. What if you began your operations starting the new year of 2020, right? January 1st of 2020 through January 31st, right? Like, so you don't have 2019 tax returns. That's fine. They're going to be looking for your 2020 tax returns. My recommendation to you is go get that done and get that filed if you have not yet filed it, because that's going to be critical for them understanding that you are in fact a legitimate business and that you did sustain a loss or that you did invest money into the business to make you eligible. This connects to the eligibility. Now, if you don't have your 2020 taxes filed, right, remember, you got to go in and get the financial statements, the income statement, aka profit and loss, the balance sheet, sign and date it. I would even go so far, if I were you, to get what we call a letter of comfort from your accountant or bookkeeper that says that they have direct knowledge of your business and that you did in fact start on X date that you are stating, and this is the information is true and accurate to the best of their kind of ability, what they're seeing. All right, go to that little extra step because again, you're confirming your eligibility and that the information you're providing is true. Okay, then is saying that if your 2020 tax returns are not available, remember you can submit those internally or externally prepared financial statements, but they have to be signed and dated. You are making a statement about the business. Now, if you were in operations but you didn't actually make any money, right? Like you had gone in and signed a nice lease and you're getting ready to get going, and maybe you bought some equipment and you had bought the franchise, right? And you just paid a bunch of money, but you weren't actually able to get started, but you had sustained losses for a business venture. They're saying that you have to provide that documentation. Right, and remember that documentation should be connected to your IRS tax filings for that entity or for that individual owner, right? And you have to connect it to making the investment ahead of the disaster date, which is that January 31st of 2020. That's a lot, right? I know, I know. Okay, so let's go into the conversation about interest rates and terms. Because again, I'm seeing a lot of confusion about this. What people are looking at is the fact that these are low interest rates, right? And the terms are nice and reasonable. Right? So interest rates for for-profit businesses are 3.75% fixed for 30 years, right? Like where are you going to find that? That's why people want this type of loan. Right, nonprofit businesses, it gets even better. It's 2.75% fixed for 30 years. But this is where I want people to slow down and really think about what they're doing. All right, so there is a payment deferral, which by all rights needs to happen because businesses aren't necessarily in a position to start repaying the loan, right? They haven't been able to really get up to par and get things going or see the cash flow return. So payments are being deferred for the first 18 months. That's a year and a half, right? But interest is accruing on that outstanding amount for that period of time, right? And if you don't understand how that interest is accruing, that's a huge amount of money before you even start making a payment. And you know, there's like a second shoe that could fall here that could hurt you if you're not careful. All right, so you're going to be making that principal and interest payment over those years. And if you extend it for a long period of time, that is a lot of interest that's accruing. Now, there's no prepayment penalties, thank goodness, right? So you can always prepay this to relieve any interest expense. But I don't see a lot of people doing this right now. All right, so I wanted to walk through how that interest is actually calculated so people could see what I'm talking about when I say this interest for 18 months. 18 months actually translates to 548 days, right? At 3.75 annual percentage rate, and let's just take a loan amount, right? Let's say 150,000. I see a lot of $150,000 loans out there in the marketplace right now. So at $150,000 at 3.75%, that translates, you just multiply that, right? That translates to $5,625 of interest per year on that balance. Right now, we're not talking about a year's interest yet, right? So you divide that by 365 for the number of days in a year, and we see how much interest is accruing each day. So each day that business owner's not paying that debt, $15.41 interest is being accrued. Right now, if we take that $15.41 times that 548 days, that 18 months, before you even make a payment, right, you have accumulated $8,445 in interest. All right, and that's where you start. And then there's going to be interest upon that. All right, so please, I want you guys to, I'm begging you, think about this type of loan as being a priority to pay off, even at a low interest rate, because of the way the payments are structured, right? There's a lot of debt that could be amassed through this that people are not paying attention to right now. Okay, switching conversations. All right, a lot of individuals have already received their EIDL amount early on in 2020 or maybe earlier 2021. And just recently, within the last few months, the government's come out and said, guess what? We're going to go ahead and kick it back up to $500,000 in a maximum amount. So for businesses that have been heavily impacted and they need that additional assistance, you can get an EIDL loan increase, right? And so that was like hotcakes. Everybody was applying for the EIDL loan increase. All right, so let's talk about that. So that increase became available through law back on April 6th of 2021. Right, it increased it up to that $500,000. And what they did is they basically said that they will support 24 months worth of economic injury for businesses that has sustained extensive losses. So instead of supporting them for 6 months was all that was being supported back in 2020, they're now reframing that and saying this disaster is lasting longer than the anticipated 6 months, and they're actually allowing people up to 2 years of support. That's huge, right? There's a lot of businesses that need that. But businesses that had already taken out an original loan that are looking for this increase, there's no new applications, all right? There's no new application. You can't go on to the sba.gov/EIDL and apply again. If you do that, you're going to get back an immediate denial that says that their application already exists ahead of that application and they're deleting the second application. Right, the reason why I mention that, there's a lot of business owners that maybe have gotten wind that they messed up along the way on their first application. They didn't understand how the loan amount was calculated. They put incorrect information, and they're trying to fix it by going and taking in another application. That never works. All right, so take it from me. They're just going to basically say there's a duplicate application in the system, and they're going to delete the more recent application, which is essentially what people are trying to fix, right? Not going to happen. You have to stick with the original application that was submitted, and you have to fix those errors through a conversation with SBA. They might have sent you an updated 2202 loan application for you to complete. All right, that might be out there, right? Other stages, it may look different. They might just ask for different support documentation, but they are now sending you to that new portal that was created in the recent weeks, right? And so you can find that SBA portal by going to the https:// COVID-19 relief 1.sba.gov. I know, that's crazy, right? Don't worry, we're making these slides available to you so you can get all this information after, okay? But that's the portal. You need to go to the portal, create a login or sign in if you don't already have one, and then submit the request for the increase there. All right, you can increase the amount up to the 24 months of cash flow support, and you have up to 24 months from the date of your original promissory note to request the increase. Now, when I say this, I am going to remind you of that breaking news, right? Where they're taking funds away from this program and pushing them towards the infrastructure bill. If funds no longer are available under this program for the EIDL loan, they will cut off any future requests. All right, they're tying it to the amount of funds available, and when that money runs out, there is no additional requests, there's no increases. They run out of funding. All right, so that's where I want you guys to be really cautious of time. Switching the conversation again, let's talk about disaster loan maximums. So remember I told you I had seen 70 business owners, not last week, but the week before, back to back in a matter of 4 days, right? And I saw all this financial information, and I was scared to death after that review because people are taking money and they're not understanding what's happening in these disaster maximums. Okay, so I am going to teach you guys right here. So how much is too much? All right, so SBA does allow for you to take other disaster funding, right? So like the PPP, so if you got the PPP, you can still have the EIDL. If you've gotten or you're applying for the RRF, no problem, you can still have the EIDL. Or the SVOG, you can still have the EIDL. But the problem comes in here. They are going back and making sure that you're taking what you need, all right? You can't be greedy here. You can't eat the entire pie, right? There's other people that need the pie too, right? Or want to taste. You have to take just what you need. So how do you understand how much you need and how much is too much? All right, so you're going to look at your 2020 and 2021 profit and loss statements, also known as income statements. Right, you're going to look at that information and you're going to figure out what your overall expenses were versus the actual operating income. All right, now typically when you've got losses, right, you're going to have what we call a negative net income. That's pretty common sense for people. You're not going to have enough money. You'd be running at a loss because your expenses were so extreme and you didn't have enough money coming in to cover them, right? That is okay to cover. But when you start showing on that profit and loss statement, also known as income statement, where you've got a positive number, and this is what's concerning to me, and all those 70 businesses that I talked to that week, a lot of them had a lot of positive numbers, right? They're going to be looking at that net income that's positive and that amount of money that you took for disaster support, and they're going to say you overborrowed, you overtook. And that's a problem because you're making a statement when you sign for this loan that it was a necessity for you to get this money. That if you did not receive this disaster funding, your business would not be able to continue operating, right? That is a hard thing to prove when you walked away from the table with more money and a profit that year. Okay, so please think through that. And I have talked to business owners. I talked to one last night, one this morning, and they're sitting on this idle money, kind of scared to use it, right? And they just don't know what's going to happen. And if that's you, do not worry. Okay, you need to forecast for disaster. We are not out of the woods yet. we're not, right? Lori was just, or Paula was just talking earlier about how there's the Delta variant, right? There's a Delta variant plus. There's like a whole nother one out there, right? We're not through the woods yet, and we're all a little worried that we're going to see another shutdown, right? Okay, all the reason to hold on to the money, okay? What I want you guys to understand is that you should be looking at that profit and loss statement or income statement, trying to determine your profitability, right? And then just start trying to understand where you might have future losses. We have a little bit of history behind us right now, right? We had 2020 where it was just shut down. You could go back to 2020 and in some way, shape, or form start to see maybe some trends or patterns or history, and maybe start to take some of the insight you gained on that time frame and maybe start applying it to 2021, right? Not saying that that's the best thing to do, just saying that might be something for you to use to try to think about if another shutdown happens, how are you going to manage that, right? Do you have enough support in order to last through that? That's the best you can do as an owner, right? Or as a manager, is just try to use what experience you do have and information that's available, for instance, through industry experts, to try to make sense and forecast disasters. But just remember, if you have concerns, like let's say you have a positive net income, but you got concerns that maybe we'll be shut down, come Christmas season, right? Document that concern. If anybody ever audited you, right, and they said you overborrowed, you could say, you know what? Based on my previous history and what I'm looking at through these industry experts, I held on to this money. I didn't use it, but I held on to this money in anticipation there might be another shutdown. You want that type of management insight documented somewhere in order to protect you in the event of an audit, all right? It's hard to go back and say, yep, I had a win in 2021 because I pivoted successfully. I didn't know I was going to pivot successfully. That's why I took the money. But if you don't have that kind of conversation live when it's happening, it's really hard to go back and create it. Okay. All right, so I wanted to talk about liens and guarantees. Just today, I had a business owner who is in the midst of a growth loan for an SBA. That means they're trying to expand and take on an opportunity that they see. She got a call from SBA last week, nonetheless, saying, hey, you're eligible for more money. And before she knew it, that money, like she said, yes, I'd be interested. And that money was in her account, right? Kind of odd, but it happened. She called me back and she's like, I don't know if that's a good thing. She's like, what if that wasn't a good thing? Maybe I shouldn't have this. I don't know if I need all this money. I came back and I was like, let's talk about liens and guarantees. Any amount above $25,000, all right, so $25,001 or above is going to require the government to take what we call a Uniform Commercial Code or UCC lien against all business assets. Essentially, they want to make sure that if anything happens to that business, it's not bought, sold, right, without the government having some stake or claim in receiving or recovering money that's outstanding to them. All right. Anything that's $25,000 or below in amount, that's a virtually unsecured loan. Right. That looks different. Now, if you were to go into that growth loan, remember that the business owner is going into a growth loan. When you borrow over that 25,000, then you've got a lien that could potentially become a problem for other lenders. All right, so I think of liens like playing cards, right? If we were playing poker, right, and I had a really good hand and you didn't have as good a hand, I'm going to win, right? Liens are just that way, right? Essentially, the government has a higher card hand than any other creditors or lenders. The government comes first in any type of default. And so they may not want to give you more money, right? Again, I'm not stating it, I'm just sharing my experience. They may not want to be behind the government in any debts or liens, and that may impact future growth. And so for that business owner that called me this morning concerned, knowing that she was literally in the conversation with SBA on another loan with a lender that would be interested in taking that first lien against business assets, I warned her that she needed to go back and talk to the lender and have a heart-to-heart conversation about what was best for her. Because that can kind of turn up your turnip truck, so to speak, right? And stop you from getting access to capital in other ways. So be cautious of that. That's something that people aren't thinking. Also, too, anytime you've got the government lien and you need to borrow money, then you've got to get the government to, I guess you would say, subordinate or go behind the other lender. And that's not a comfortable conversation. That can take months to try to figure out and to get support. It slows you down. All right, so then there's guarantees, personal guarantees, when you borrow an amount that's above 200,000. So if your loan amount is above 200,000 at $1, right, you have a personal guarantee from all shareholders with 20% or greater interest or ownership. So if that business is defaults or has something adverse happen to it, you are coming back to the government saying that you are 100% going to repay back any outstanding debts that are owed by that business. Right? When you create personal guarantees, that can become a future problem for you, because if you're trying to go for other financing, that comes a contingent liability and it becomes an affiliate debt that needs to be considered in the loan. So all of this, I don't want to scare you, just all of it complicates future growth and the success of the business, potentially. All right, so let's kind of dive into how you start calculating how much money you may be eligible for under the program. Now, when I say eligible for, eligibility and need are two different things. We just talked about that, right? I want people to think about what they need more so than what they're eligible for, because 9 times out of 10, right, your need may be less than what you'll be eligible for. It's very rare for you to be need more and not be eligible for it in this situation. That's what I'm seeing. All right, so your maximum loan amount is determined on a formula, all right, and it's really looking at your gross revenue, right, how much receipts or sales you've made, and then it's comparing it against your cost of goods sold. All right, and so you think about it, if I made $100,000 by selling t-shirts, like I'm a retailer for t-shirts, but the t-shirts I sold were 50,000, right? So my actual cash flow after operations, the maximum cash flow I would have would be that 50,000, right? 100,000 minus 50 is 50,000. Well, then I would take that 50,000 in operating capital, and then I would turn around and multiply that by 2 for an annual figure, because I'm looking at 24 months or 2 years. Right, so if you were open prior to 2019, that means you got a 2019 tax return. Right, they're going to be looking at your gross receipts, total sales, minus any cost of goods sold, right, and they're taking that number, multiplying it by 2. Very, very simple. If you're opened in 2019 and you don't have a full entire 2019 tax year, no worries. They're going to look at how many months you were open and operate in 2019. They're going to look at those total. They're going to come up with a monthly average in gross receipts or sales. Multiply that by 12 to get a look at what a full year would be, minus your cost of goods sold, doing the same average conversation, and then take that figure and multiply it by roughly 24 months. Okay. All right. Remember, and maximum is 500,000. So if you run into numbers that are above the 500,000, 500,000, 500,000 is the max for anybody. Now, if you opened in January 1st of 2020, right, they're going to look at that same type of average, but they're going to be averaging it for 2020 instead of 2019, and then comparing the gross revenues or gross receipts minus the cost of goods. Okay. All right, pretty simple, but I'm going to just connect this back to the documentation of eligibility, right? You want to make sure that you're providing quality information, and if it's not a filed tax return with tax transcripts, you're making sure you're signing and documenting the start dates, eligibility, the information that's being submitted. All right, now if you are looking at tax returns, The SBA is very nice. They provide you with a little template to tell you exactly what line items you need to be looking at and including. So there you go. You can look at their provided template in the facts and questions section. You can do that under sba.gov/EIDL. But that will tell you exactly where on that tax form you'd be looking in order to calculate your available loan amount. All right, switching conversations, audit, documentation requirements. This is where your eyes are going to roll. I promise you, I know, so much information. But remember, there's a lot of money on the table for them to audit you. So please keep your disaster fund separate from other operating funds until you've spent it. Yes, I know what that means. But think about it this way. If you were to go through an audit, they're going to look at all your bank records, right? Some of those things you don't necessarily want to have to disclose. I mean, it's a lot of headache, right? If you kept your idle money in a separate account and you moved it or spent it for designated purposes, it's so much easier for you to have an ironclad case that you used it properly, right? And to show or connect one set of bank statements for that type of information, make your life a little easier. You're required to keep your spending records for 3 years from funding. 3 years is the magic time frame, so you've got to hold on to all of that in a special file. Right? SBA does tell you in their documentation that they have the ability to go back and review your financial records up to 30 years from you take the money. I know, choke, 30 years. That's what's on the table here. I want you guys to please protect your eligibility use defense in a written format. So remember we talked about cultivating a understanding of what was happening in the management and they were making decisions before. Right. So as you are using these funds, you want to make sure that if you feel like something is really important and it is an eligible use, for instance, marketing. Marketing is not necessarily something that's on there, right? That might be considered growth. We'll talk about that in a minute. But let's say your target market is the restaurant industry and nobody's spending money on marketing in the restaurant industry. You know, it just isn't happening. You have fallen on your face. Now you want to go ahead and pivot because the healthcare industry has a lot of money to lay it, and so you want to go ahead and market to new people. That's the conversation that you want to connect into writing. All right, how you used it, and make sure that you're connecting the necessity conversation and that pivot conversation to it. If you don't, right, and you get audited and they're like, you weren't supposed to use that money for that, that's a growth conversation. You might be in a pickle if you can't connect that to how you used it for disaster. And don't expect yourself to remember all this 3 years down the road or potentially 30 years down the road, okay? You need to be doing it while you're managing or using your money. Always remember the two-pronged documentation method. I'm a big proponent of it. I talk about that in the PPP conversation. You want to make sure you're holding on to your bank statements, right? You want to show how you use the funds and when you use the funds. But you also want to connect that to specific detail on how you use those funds. So if I used it for rent, right, I should hopefully be getting a statement from my landlord or have a copy of a canceled check that's going to match up to the bank statement showing exactly how I used the money and that was connected to a disaster use. All right. You know, this is a hard conversation, but I'm going to just be upfront with it. I've seen a lot of business owners pay themselves more in 2020 and 2021 than what they paid themselves in 2019. Right. Now that's great. Like if you can afford to do that, if you've done really well, fantastic. I'm happy for you. If you have taken disaster money and you have decided to pay yourself more than what you did pre-disaster, slow your roll, okay? I want you guys to slow down. I just talked to a business owner over the weekend who paid themselves twice what they would have paid themselves in 2019 here in 2020, and they took heavy amounts of disaster funding and they had positive net income. The government's going to look at that situation and they're going to connect it to the business owner taking money where they shouldn't have, right? And then personally benefiting from it. That is not a conversation I want any of you to be under. Now, that doesn't mean that you can't compensate yourself more if you're doing better, right? Like everybody wants that for you. But when you're connecting it to a disaster time frame, you're taking more disaster money, I, I would caution you to be very careful on how you handle that, right? Be mindful of owner compensation in this conversation. And just if you've over borrowed money and you're not using it and you feel like you don't have anything to lose now, like the disaster is behind you, you're doing really well. If you've over borrowed money, you can prepay that back to the government. You just go to pay.gov and make sure you've got your EIDL application number to reference, but you can pay that money back to the government and relieve yourself of any, lingering fear that they're going to, audit you or potentially fine you for taking over the amount of money you need. All right. You can always prepay with no penalty. Right. And just please connect the use of your funds with your need. All right. And look periodically at that profit and loss or income statement for that net income. And if you're still holding on to disaster money and trying to use it appropriately for the approved uses, just make sure you're connecting it with need. And if there needs to be commentary to that, you're providing that. Okay, so I told you there's seasons in this conversation, and declined EIDL loans is a season. All right, I'm getting a lot of that right now. There is a reconsideration process, so you have two chances to get reconsidered. Okay, so you applied, you got denied. You can reapply. You can ask for reconsideration. And let's say they deny you again. Guess what? You have a third chance. You can go back and ask for reconsideration. But unfortunately, if you get declined a third time, you can't go back again. All right. So please, before you go back and ask for reconsideration, I want you to document that you meet the eligibility requirements for the program. That's right. Make it so painfully obvious that you are a U.S. citizen, that you are in operations from the time of the beginning of the disaster, that you are considered a small business, right? That you have less than 500 employees, that your credit score is that 570 or above, or you've got that letter of explanation to show that you should have that, right? Make it painfully obvious that you qualify for the loan. Document everything and apply for reconsideration using the outline that was given to you in your decline letter. What they tell you to do, you follow verbatim, all right? And keep up with your information.
Hey,
Now,
Rebecca,
yes.
I think we lost your slide deck.
Oh, okay, that's weird. Hang on. I'm gonna stop and reslide. That's really weird. Okay. Thanks for letting me know, team. Okay. Can you see it again?
Yep, there it is. Thank
All
you.
right. You got it. All right. So after you submit your reconsideration, all right, I'm going to tell you guys the ones that get the answer quickly are going to be the ones that call twice a week. I put people on these regimens like a doctor. Call twice a week to the hotline. There it is, the 1-800 number here in green at the bottom, 659-2955. Remember, it's manned 7 days a week from 8 a.m. to 8 p.m. Just call twice a week. Got to have your EIDL application number and just check on the status. Ask them if there's anything outstanding that they need. Ask them if they have anything, if there's any updates, whether or not it's been assigned to a loan officer or LO. Just get a status. Each time you call and check in with them, they note it, and then it shows that you're actively seeking support, and you will rise to the top of the priority button. All right, top 2 reasons for declines. This is what I'm dealing with every single day. Okay. Credit score concerns. Yeah, COVID has been bad. A lot of small business owners have been beaten up. So getting to a 570 credit score is hard for some people. Just remember that you have the ability to explain what happened and was directly connected to the pandemic and you're working on it. And you can basically say that your score will improve, or this is not going to be, these delinquencies are not going to be competing for financial repayment next to SBA. Like maybe it's a one-time situation, right? You want to explain that. Just make sure that you're documented in writing. You can't tell somebody or email it to somebody. It has to be an official letter, credit credit explanation letter at the top, sign it and date it, that it's your written statement. Okay, and then the second is going to be unverifiable information. Oh my goodness, that will drive you crazy. Okay, that means that they weren't able to verify certain aspects of your eligibility. That could go even tie back to any type of international IP addresses. So maybe you're applying for the EIDL reconsideration and you're on vacation in Europe, right? Or maybe you're in, I don't know, Latin America when you're doing this. If it comes through as not being a US based IP address, not going to happen, all right? They'll lock you out and you'll try to figure out what's going on, all right? So make sure that the IP address is coming from the United States. Also, too, you have to respond to any identification questions within 7 days. If you don't, they'll automatically deny you and just say that they were unable to verify you. You won't have anything on that. So make sure you're looking at that portal for communication and you're calling every twice a week, right? Because then you will never fail on that 7-day conversation. All right. And also to make sure the SBA understands that you or any affiliate business has not reached that 2 million limit. Let me tell you a story. I had a business owner who had multiple businesses. They had not reached the $2 million limit, but he was going mad because he did not provide the tax returns for the other affiliate businesses. And finally, after getting the SBA Washington, D.C. involved, I mean, we literally months later and many, many requests, we found out that he had to prove he didn't get $2 million. I mean, for him, he was trying to get even 100,000. So 2 million was not something that was on his radar, but SBA saw affiliate businesses and needed to go to the extent of confirming that they hadn't received any more than 2 million. All right. It may be a no-brainer for you, but that doesn't mean that the SBA hasn't, had to verify something. All right. And then again, making sure that you don't exceed the 500 employees. I know that seems really ridiculous in some cases, but if you're not a sole proprietor where it's evident that you're the one person in your business, you need to go ahead and verify a statement that you are smaller. Okay. Whew, right, so there's SBA Form 355, which you can complete as part of your reconsideration, verifying that you are in fact a small business. So that might be something that you need to go and look for on SBA.gov, Form 355. All right, so remember, strike 3 and you're out. You only have 3 shots at the reconsideration, so use them wisely. You do not want to waste them. Wasting would be you not responding to them within 7 days, right? And then you get denied, and that might be your last shot. It's just three chances to get it right, so go carefully. Real quick, targeted EIDL advance updates. So there's more money. It's another shot in the arm, okay? So there's some businesses that are really impacted by COVID. I talked to one today. It's just so extremely sad. And so the emergency grants, they go through December 31st as long as the funding is still available. And what they're doing is they're extending to qualified businesses within low income communities up to a maximum of $10,000 in grant money. So if a business owner had received $3,000 in 2020, right? If they qualify for the targeted EIDL advance, they can get up to that 10,000, so an additional 7,000 in that instance. 3 plus 7 is 10. Now, remember I had mentioned that there's a whole nother level of this. They're calling it the targeted EIDL advance supplement. I know there's that other name added to the end. And so for those that qualify, that can really show they were impacted heavily, that's over 35% decrease in revenue, I believe, between 2019 and 2020. They can qualify for up to a maximum of $15,000 in disaster targeted EIDL disaster funding, right? Right. Just remember that funding happens quickly, but you have to provide the necessary information and wait for SBA to make the decision. All of that goes through the portal as well. And just like I said, you want to go ahead and put on the call twice a week for SBA under the EIDL loan application. You're going to do the same thing for the targeted EIDL advance. All right? And by the way, if you're calling in and you're looking for that supplemental, that's a whole nother product in their system. So you would be checking on the targeted EIDL advance, and then there should be a second targeted EIDL advance supplemental. You'll ask about both, okay? So crazy. All right, what to expect? All right, SBA is going to be reaching out to applicants that have already received the EIDL advance, right, and looking to try to help them with additional funds. The email to contact for that is going to be targeted advance at sba.gov. If you want to learn about the supplemental, right, you got to go to targeted advance at sba.gov. Email them. Make sure that you put in that subject line that particular SBA EIDL application number. Everything comes back to the same application number. All right, so this is a maze, right? You feel like you're looking at a maze. All right, so eligibility for the EIDL advance, 300 or fewer employees. Remember, it's smaller. All right, sole proprietors, independent contractors, private nonprofits, even agricultural enterprises. Well, all but agricultural enterprises, sorry. Those others are eligible, but not agricultural enterprises. All right, have to be within that low income community, and you have to demonstrate you have more than a 30% reduction in revenue during an 8-week period beginning on March 2nd of 2020 or later. I know. Something else. I have a little example. I put it in the slides for you later. Remember, it's the difference between what you've already received up to that maximum threshold. Ooh, here we go. Shutterstock. Okay, idle use of funds. This is fun, okay? So the money's flying out the door. All right, so use of funds that's appropriate, that's going to be your payroll costs. It's going to be your rent payments. By the way, rent payments that are due on obligations or rental agreements that were in place ahead of the disaster, or you've got to tie that communication up. All right, the last thing you want to do is go and get a brand new rent or lease agreement. That's opportunity. That's not disaster. And then start making rent payments on that. That's not acceptable. Unless, of course, you can connect your disaster situation, like your landlord wasn't going to work with you, or you're trying to reduce your expenses and you're moving from one facility to another facility and you can make a claim. Remember that management written explanation, right? Then you can use the rent payments, but you just can't go start or grow and do something new in the middle of the pandemic and use the disaster loan money to fund it. They'll call that growth rather than disaster. And then utility expenses. Scheduled mortgage payments for home-based businesses, as long as you are not doing any type of prepayment of principal on that. They don't want to see where you are taking disaster money and trying to benefit in the long run from it. All right, and then scheduled debt payments, it's just the minimum payment. You cannot pay off debt with this. Big no-no. All right, you cannot prepay any type of principal, but you can set aside the monthly minimum payments to those debts, all right, all the way through the end, but you cannot prepay. That's tough, right? Worker protection expenditure, so your PPE, you can pay independent contractors, all right? So maybe you're hiring somebody to help you with your IT security, or you're hiring somebody to help you with some other aspect in your business, right? Paying those independent contractors is okay. All right, and then other ordinary or necessary business expenses, including maintenance expenses, administrative costs, licensing, permit, anything like that, state or local taxes, and then operating leases in effect. Remember, we said the date of disaster, so as long as the lease has been in effect, and then any type of insurance payment, operating expenses. All right, unapproved use of funds, buying real estate, big no-no. Anything that could be considered what we call prospect use. That means that you are essentially don't have a full end on how you're going to exit or make money. For instance, flipping houses is prospect. I could buy a house, I think I'm going to sell it for $200,000, but I don't have a buyer lined up, right? I'm sitting on the market. The government doesn't want to see you using their money for uncertainty, All right, that's not something that's gonna fly well for them. And then making payments on loans that originated after the date of disaster. Um, as long as it's an operating expense, that's okay, but be very careful. All right. And then make investments or other loans. So you can't take money from your EIDL loan and turn around and loan it to a friend or loan it to another business of yours, right? That's a loan or investment. They're not going to, like that. And then any contributions or payments on behalf of political parties, nope, not going to happen, or any other prohibited use by SBA. Can't go gambling, can't go on vacation. They're very unfun. All right. All right. Audit and documentation. I just like to hit this twice, right? You must maintain your spending records. We just talked about how you spent the money. You must retain the spending records and show the use of funds complies with the terms of the agreement, right? And retain your documentation for 3 years, knowing that they can come back and look for 30 years. Woo! So in summary, okay, the SBA administration has been an essential part of helping small businesses recover this year, right, and into the future. And these programs are targeting businesses that have been heavily impacted and still struggling to recover. So if you cannot say that you have been heavily impacted and you're struggling to recover, it is not right for you. So the focus is on helping the smaller businesses with smaller loans be able to survive. Just remember, financial audits will increase over the next 3 years. Like, it's going to become commonplace for us to talk about. And then I also anticipate that employee employment records, right? Because there's quite a bit of unemployment happening right now. I'm laughing because I know you guys know this, right? It's hard to get employees, but your employment records are going to be important for the government to see who tried to abuse or misuse other government resources. All right, so anticipate have them calling or being part of your audit. And the SBDC will become an important part of your recovery and restructure going into the future. So don't feel bad about reaching out to them for support. They're doing everything they can in order to give you the information you need to make the best decisions. So lean on them as a resource. With that being said, my name is Rebecca Schultz. I am the founder and executive loan consultant for Centerlock. I love what I do. I love talking about money. All right, so if you have questions about today's presentation, or you just need to reach out to me to make sure you're doing things okay, I'm happy to respond to you. No problem there. With that being stated, I'm going to stop sharing. And I know there's a lot of questions because I talked for a long time.
There are quite a few questions. Okay, let's see. I got declined saying I owed child support, and I sent a DOR letter proving I didn't, still waiting, and then got another letter saying that inviting to apply for supplemental advance, and got another decline for child support and had to submit another DOR letter. Still waiting for response on either of those.
Okay.
Suggestions?
Yeah. All right. So you're in a battle of proving things, okay? So the best thing I can tell you is you want to remember that two-pronged system for verification. Let's apply that two-pronged system to your evidence that you don't owe back owed child support. So there is something that's telling them you do, and each time you go back and try to get help, they're checking the same system. My guess is that your name is either on your credit report as back owed child support, so go pull your credit report, right, and just check and see, or it's on some public record, right? There is a system out there. I'm trying to remember the name of it. I can't think of the name of it, but there's a system out there where the government checks for that type of data. Your name's on it most likely. Let's start with the credit report to see if you can get that corrected if it shows up, and then I would specifically try to go to the, I guess, child support division, right, and ask whether or not they're reporting you to another data source as being delinquent, and maybe that needs to be corrected. There's something there that you've got to prove. So what they're questioning is whether or not what you're providing them is accurate. Okay, because they're getting it from someplace else. Your name's out there somewhere. So you need to probably get verification from a second source showing that you are current with your child support. I would provide two sources of the information that you're current, and make sure that that is cleared up so it's not falsely giving, incorrect information on you.
Complicated. Ow. Okay. If applicant has applied but not yet been approved, do you think funds will be left at the time of the decision?
That I don't know. So I will tell you that that bill passed the Senate. It has not passed the House, right? And so if it doesn't pass the House in the current form, that might be changed. But this is where you, as a small business owner, have a voice. So call your House representatives if you're concerned about that. I understand they were going to take a majority of the funding away and just leave a very small amount. But call your House representative. Tell them they can't do that. Like, you're still not through your process, You can be an advocate. This is where we work together to share. But when it does pass the House, when and if it does pass the House, it'll be signed into law. And it usually, what we've seen historically, that date is the cutoff date, right? Funds are cut off from that date. So just call your House representative, call call SBA twice a week. Try to resolve the issue as quick as possible because there's no certainty that the funds will remain.
Wow. Again, painful. Let's see. If a business took out an EIDL and then sells the business, can the new owner take over payments and responsibility of the EIDL with loans under $200,000?
That's a good conversation. So I would tell you that that is part of more of a negotiation. Most business acquisitions do not have liabilities attached to it. It's very rare for them to have liabilities. All right. Most of the time, that new owner is not going to want to repay back the government loan, especially for disaster funding, because think about what that's saying about your business, right? It's not good. Right. So I would be shocked if they would even entertain it. But if they did, let's talk about the fact they did want to take on this government debt. All right. Then you've got to go back to SBA. It is possible for them to take over the debt, but SBA has to vet the new owners and essentially go through that paperwork process with them. And there's typically more to it than that. Their plans for recovery, their plans for moving forward with it, right? And then again, you're acknowledging that the government has a lien against those business assets to which you sold if that amount is over that $25,000. It's not a comfortable conversation. It can be very labor intensive. So personally, it's not the best position to start out with in a conversation in a business acquisition, but it is possible.
Rebecca, sorry, I'm just gonna, I had that question posed to me, and it was just interesting why the question was posed to me, because I hadn't thought about it before. But typically, when you're buying a business and it's just the business versus real estate involved, those loans are out there at 7 to 10-year amortization. And so with the SBA EIDL loan going out 30 years, the payments are so much lower. So that was why this person was asking me about that, because that just represents a chunk of change that is at a much lower payment than what a new one. I just thought I would throw that out there because that's what he represented.
Yeah, no problem. I still say, again, if we were playing poker, and somebody was buying a business, not a good place to put them in with a government debt or lien on it. They essentially are walking away with no clear rights to any assets there. It would be an uncomfortable conversation.
Question about hiring foreign call centers. Do you know what role they are playing? Are they just gathering information or making cold calls or something?
So they are reaching out in order to get people to complete or to communicate with people. So that is one, right? They don't have access to being able to see the database. That's a tier 2. They just are there to take your call, to leave notes. They don't have access to everything, but you know what that's like, right? You get on the call, it's hard to understand. It's not a fun conversation, I can tell you, but you are able to at least get a limited amount of information and leave messages. But yes.
Okay. So, kind of a last ditch effort to get all of this cleared out and everything processed timely. I understand. Maybe not ideal, but I can understand. About owner compensation, if you weren't paying yourself at all in 2019 and started actually paying yourself in 2020, is that a problem?
Potentially, yes. I'd be very careful. If I was looking at your profit and loss statement, also known as income statement, and I was looking at your 2019 versus your 2020, if your net income was high, like on 2020, and I could look at that net income and try to relate it to the debt that was showing up on your balance sheet for government assistance, right? I'm looking at that and I could see you were only profitable because of that government assistance. And then I turned around and looked at how much you as an owner paid yourself, and you paid yourself more than 2019. Think about the story that's going along with that, right? You could say you personally benefited from government assistance. Now, let's say the story was different. Let's say in 2019 you didn't pay yourself, you were investing all the money into the business. 2020 happened and you had an increase in revenue, right? You did better in 2020 than you did in 2019. Right? And because of the increase in just natural revenue, not necessarily government assistance, you paid yourself more. No problem, right? That's not a problem. But it could be a problem if you didn't give back government money that you didn't need, right? That there's that fine line where you've got to basically identify whether or not you, and I hate to say that, right, took advantage of government assistance personally. We saw the government put hard stops on that through the Paycheck Protection Program, right? They basically said that owners cannot compensate themselves more than their 2019 compensation, personal compensation. Even though they have not said that for the EIDL conversation, I anticipate with that audit that that conversation is going to come up.
Another one of those difficult conversations, yeah. Okay, if a business is seasonal and the location of the business is in a low income or underserved area, but the business address, like the owner's address, is not, is there a way that they might be eligible for the targeted EIDL advance?
Ooh, that is a good one. All right, so typically they're going to be looking for the address that you put on the application. So for that question, I would say, what did you put as the address for the application? If you put your home address, because that's what you use for all of your, business mail, then they're not going to know that the business is operated in a low income area, right? They won't let you go back and fix that on the application because that gives you the opportunity to falsify. Not that you would, right? But they're not giving you the opportunity to re-identify. Now, where you might have a connecting piece in that conversation is if you filed that address on the tax return. Let's say you're filing under a Schedule C, right? A personal sole proprietorship. And your personal address on that tax return is your home address. But in the body of the Schedule C, you put the low income address as the address for the business. That would be something that you could basically raise your hand and say, no, I've provided you evidence of my low income address, right? But if you, and I gave you my mailing address, but that would be a connecting piece. But if you don't have that connecting piece, you wouldn't be able to fight that.
Gotcha. And all of the targeted EIDL advance programs are location based, correct?
Yes, 100%.
Okay. Can you use the funds to pay off credit card debts incurred due to not making payroll or not having the funds to cover operating costs?
That is a good conversation. And so what they have said is that you can pay operating expenses. They have not said that you can pay off those debts. Now, if you're looking at those debts, and let's say you took money from On Deck, okay? Let's say you took money from On Deck, or something like that, where it's a high interest rate amount, and that the remaining due date or term is within a year. Okay, so let's say I took out an On Deck, I'm supposed to have it paid off in 6 months. It's eating my lunch. You know, that 6 months is less than a year. In that case, I would say if you made 6 months worth of payments, it's less than a year, right? That's just as good as you just paying that off in one lump sum, right? But technically, you're supposed to just be servicing the note, not paying it off. But if you can pay it off in a short amount of time that's less than a year, that's like a current liability. I feel like you'd be okay with paying it off. But beyond a year, just make your payments. You're going to be stuck in that interest.
Okay, any other questions that haven't shown up in the chat yet? Okay, oh, okay, no one's reaching out, raising their hands.
I feel like you guys are all looking at me, but I'm going to be quiet this time.
Well, I didn't want to actually verbalize it, you know, didn't want to embarrass you. So, Rebecca, I have no words. Thank you so much. Thank you so much for all you do for us. I just want to tell everyone that we'll be sending out a survey. Please take a moment to complete the survey and send it back. We really appreciate your input so that we can better serve our clients and our community as far as webinars and information that we can get out there to you. Just want to show you some of our upcoming webinars. Join us tomorrow for What is Copy and Why You Need It to Grow with Ashley Cook. That should be interesting. Next Tuesday, we have a double header. How to Manage Your Social Media Strategy with Marsha Hudson. And then we have Rebecca back with a new series, Money Smart Startup Businesses, Part 1. I'm really looking forward to that. So tell all your friends. August 18th, we have Eric Spelman coming back. He's going to talk about the 10 mistakes hackers want you to make. So if you're interested in cybersecurity, join us on the 18th. And August 24th is Rebecca coming back for Part 2 of Money Smart Startup Businesses. So thank you all for joining us. You can register for any of our webinars by going to our website, www.sbdc.nctc.edu. You can also get contact information. You can schedule an appointment with an advisor. You can also find all kinds of resources for small business owners. A new tool that we have out there is called Size Up, and you can use it to get industry information. Really just lots of data that you can collect on your own. Pretty interesting stuff. I want to thank all of our benefactors, the Small Business Administration, the state of Texas, North Texas SBDC Regional Office, and North Central Texas College. Because of the funding that we receive from them, we are able to bring information to you like we did today. I want to thank you all for joining us today, and we look forward to seeing you next time. Rebecca, as always, it was wonderful. Thank you all. Have a great afternoon.
Thank you.
Hi, Rebecca.
Bye.
Can you stick around?